Trucking company owners, if you need funding for fuel, repairs, maintenance, payroll, or fleet growth, this video is for you. Today, I'm breaking down how trucking businesses can position for 50K to 2 million in funding and how to avoid the runaround. Welcome back. It's Demetrius. I help business owners understand funding options and what lenders actually look for. In this video, I'll show you how trucking funding works, what documents to prepare, the biggest approval factors, and the steps you can take to improve your chances of getting funded faster. If you want more funding content for trucking companies and other businesses, like, subscribe, and hit the notification bell so you don't miss the next video. Why trucking companies need funding and why timing matters. I'm going to talk through some common pain points. We're going to start with fuel costs rising. Repairs and breakdowns happen at the worst time. Insurance, permits, and compliance costs. Waiting on broker customer payments. Needing capital to add trucks, drivers, or routes. Now, here's a key line. Trucking businesses can be profitable and still hit cash flow pressure because money goes out before money comes in. Now, what funding can be used for? I'm going to give you some examples what the funding can be used for. Fuel and operating expenses, emergency repairs and maintenance, tires, engines, transmission work, payroll and driver-related costs, working capital while waiting on receivables, equipment upgrades, and fleet growth. What lenders look for in trucking funding. So I'm going to break this down clearly. Number one, monthly revenue and deposits. Consistent deposits are a big factor. Lenders want to see real cash flow activity. Number two, bank statement health. Non-sufficient fees, overdrafts can slow approvals. Cleaner statements usually help decisions move faster. Number three, time in business. More time in business often means stronger options. Newer companies may still qualify depending on cash flow and profile. Number four, existing debt load. Multiple payments stacking can reduce approval size. Explain why cash flow capacity matters. Number five, credit profile. Credit matters, but many options also weigh business performance heavily. Number six, use of funds clarity. Fuel, repairs, working capital, growth equals fundable reasons. Specific plans are better than vague requests. Comment funding if you want me to tell you which part of this scorecard usually hurts tracking approvals the most. Now, documents to prepare. Speed equals preparation. Tell them exactly what to gather. Now, here is what you gather. Last 63 months business bank statements, photo ID, business information, voided check, bank verification if requested, trucking company docs, entity, info, EIN, etc. Invoices, contracts, or dispatch payment history is helpful. repair estimates or equipment quotes if applying for repairs or upgrades. Now, here's the key line. The faster you can submit clean docs, the faster underwriting can move. Now, here is 7 ways to improve approval odds. Number 1, clean up bank activity now. Reduce non-sufficient fees, overdrafts immediately. Keep a buffer in the account if possible. Number 2, build deposit consistency. Show steady cash inflow patterns. Avoid large unexplained gaps when possible. Number 3, separate business and personal spending. Mixed accounts create confusion and delays. Number 4, be specific about use of funds. Example, fuel $20K, repairs $30K, working capital $50K, growth $100K. Clear breakdowns can help underwriting. Number 5, right size your request. Don't overreach. Match the request to cash flow and repayment ability. Use a phased plan. Stabilize first, grow next. Number 6, avoid stacking too many obligations. Too many daily or weekly payments can crush cash flow. Number 7, apply strategically. Not everywhere. Match the funding option to your business need. One clean, targeted process is better than scattershot applications. Now, here are some common trucking funding mistakes and how to avoid them. Applying for too much with no breakdown. Not having docs ready. Too many overdraft, non-sufficient fees. Mixing accounts. Taking short-term money without a cash flow plan. Waiting until the situation becomes an emergency. Now, the key line, funding should solve a problem and support growth, not create a bigger cash flow squeeze. Now, here are some real-world trucking scenarios. Scenario A, fuel and repairs bridge. Owner-operator needs funding to keep trucks moving after major repair. Scenario B, working capital while waiting on receivables. Strong loads coming in, but payment timing is tight. Scenario C, growth capital to add capacity. Adding trucks, hiring drivers, or expanding routes with a structured plan. Now you should tie each scenario back to deposits, bank health, clear use of funds, right size requests. If you own a trucking business and need funding for fuel, repairs, or growth, comment funding and tell me, number 1, how long you've been in business, number 2, your average monthly revenue, and number 3, what you need the funds for. Or click the link in my description to get started. Trucking funding doesn't have to be confusing when you know what lenders look for. If this video helped you, like, subscribe, and hit the notification bell for more business funding content. I'll see you in the next video.